All right, I am back here with my very special guests from First Capital Asset Management Limited. Let's give them an intro. First off, we have Mr. Kumaravaran Kanagasooriar. He is the Assistant Vice President of First Capital Asset Management. We also have Mr. Rahul, Samarakoon, the Senior Associate. Good morning and welcome to the show.
Good morning, everyone. Hi.
Awesome. All right. So the topic for today, guys, is investing young, right? And just essentially, if you can kind of get directly into why should someone invest early and what is that all about?
All right. Very interesting question. So just put it this way, Rajith. So if you look at it, if you went a year back, right? And let's say you save, let's say 10,000 rupees every month in an account, which was giving about 3%. Yeah. You would have ended up with, let's say about 3,600 rupees, if I'm very precise. But then let's say you did a similar thing, just an alternative. Let's say you went and invested that money. Right. In, let's say, a low risk, a comparatively low risk investment option like a, let's say, money market fund. You would have earned about 10%, and that would have resulted in you earning ultimately about more than 3 times of what you would have actually saved. So, which is an interesting way to look at it, because when let's just, if we keep that as a base level to start with, if you understand how much you can invest, what your risk is, what your risk appetite is, you can essentially look at options that could even give you higher returns. Right. Okay. So if you really map it out, when you invest, when you start early, when you invest young, it essentially gives you that opportunity to retire early as well. Right. Fair enough. In terms of retiring early, how's that possible?
Okay, I think that's a good question. So if I answer that question directly, it is possible, right? So if you're talking about retirement, I think we should understand what kind of actual meaning of the retirement is, right? Right. So you might have heard about it, the call capital, like the human capital and the financial capital. You might have heard about it, right? Yeah. So if you're talking about someone's early career, early stage of the career, the human capital portion will be higher. Technically, if you're talking about the financial and the human capital, because he or she has the more capacity to earn more potential income in future. Right. So the human capital is higher. So if you're talking about towards the end of your career, like you're talking about towards your retirement, then you see your human capital worth will be reducing and your financial capital will be increasing over the period, because technically you are converting your human capital into the financial capital. So if you can do the building of the financial capital sooner, which means you can retire technically from your main source of income. Right. So if you're talking about that, the main problem here is how you are going to build your financial capital sooner, right? So that's where the investments play a key role. If you can earn more return from your investments, if you can speed up the process of building the financial capital, where it will lead to ultimately to achieve your early retirement. So that's what. Right. Okay.
And essentially what it enables is enabling your primary job to be an optional one, because
exactly. That's what I'm trying to mean, because it doesn't mean that you have to stop earning your primary job income, right? It's going to be optional where you can actually earn your income from your financial capital that you're going to build based on the human capital over the time.
Right. Yeah. All right. Awesome. Let's get to our third question, and that is, of course, investment options now. Maybe if you can get into that a little bit, the options that we have and how you can start.
So, Rajith, let me put it this way. So it's something I personally follow, right? Yeah. Think of it as a GRR, right? Right. So the G stands for understanding your financial goals. So when I say financial goals, it doesn't mean that you essentially make an investment at one time, right, and then you just forget about it, right? But it's about having and knowing that you can always invest whenever you have a cash flow, an income coming in. You can always set aside a portion of that to invest. But when you invest, you got to make sure that it aligns with your financial goals. Right. It could be maybe you want to buy a vehicle in 5 years. It could be you wanting to build your wealth over a long period of time. Whatever it may be, you just have to first understand your financial goal. Right. Yeah. Then you go into what is important is to understand your risk appetite and your risk capacity. What that means is essentially, risk appetite is how much of a riskier investment option would you like to invest in?
Right.
Or would you like to play? Are you someone who would like to play it safe?
Right. Yeah.
Right. And the risk capacity is essentially, let's say you like to take a bit of risk with your investments, but considering the financial obligations you might have a family that you maintain, and then there may be certain loan payments that you have.
Yeah.
With that, maybe you need to understand what your risk capacity is.
Right.
How much of risk can I actually take?
Okay.
Because you got to make sure that you meet your financial obligations at the end.
Yeah.
So once you understand that part, then you come to the last part. So you filter down your goals, you filter down your risk. Now you are at a place where you know, okay, out of the few options that I'm left with, what could potentially give me the best return?
Right.
So then at that point, it's just a matter of funneling that cash flow, that money that you know that you can invest into that option.
Right.
So if I really put it simply, just if I share with you my personal way that I look at it, on a month when I get so right now my income is my salary that I earn from my job.
Right.
Whenever I get that, the first thing that I do is I move it, almost about 90% of that, I move it to a money market fund.
Right. Okay.
This is just to manage my cash flow, by the way.
Right.
Then every week, I take whatever the amount I need, because I have already made a budget beforehand. I know how much I need for a week. And I just take that amount out of the money market fund every week, because the money market fund gives you that flexibility for you to just take your money out whenever you need.
Right.
So once with that option available for my cash flow management, just to manage my daily cash flows, when I have accumulated a sizable amount that I think, okay, look here, I can maybe take, because I know my risk capacity, I know how much I can invest, I take a chance and I invest in something a bit more longer term.
Right.
I lock my money in, maybe it could be a stock, it could be a government security, or it could be a different corporate debt option, it could be a debenture or so on.
Right.
And another option that's there, which is very interesting, is the unit trust funds, right?
Yeah.
So when you look at these unit trust funds, for example, when you take something like a money market fund, it's a more short-term fixed income fund, which I told you can just, withdraw anytime you want, invest anytime you want.
Yeah.
And then you have maybe a little bit more longer-term funds. You got certain income funds that could give you longer-term fixed income returns. And then you also have equity funds, where, let's say, you like to get those equity returns, those big money, but you really don't have the time and you don't really have the knowledge to invest in those stocks. So in that case, you can actually use a equity fund which is managed by a professional who knows what they're doing.
Yeah.
You can invest in equity fund and get those long-term equity returns. So that's basically what these investment options that's there in this investment market.
Right.
And how you can actually navigate your way through to those options. So
Okay.
The last thing I could say is just always remember the GRR.
Right.
So,
What's the GRR once again?
So the GRR, G stands for the financial goals.
Yeah.
The R, the second R stands for, the first R rather, stands for the risk.
Right.
And then the third one is return.
All right. Fantastic.
Yeah.
Thank you so much. That was very, very comprehensive. So we were talking about investing, Jan. That's the topic for the day.
Yeah.
And we were talking about investment options, what the options are, how you can start. So if I'm a new investor, Mr. Kumaravaran, what would be the first step that I need to take? What should I do?
I think that's a very good question. A very good question. I think most of the new investors who is actually looking to begin their investment career or like investment journey is looking for an answer for that. If you're talking about that, I would say like first impression in anything in our life, it's going to be in lifelong, right?
Yeah.
So that's going to be the case in every one of us' life. Right?
Absolutely.
So
Yeah.
if you're talking about the investments in terms of the newcomer who is coming into the industry and starting an investment, so it should give a kind of a flexibility where they can actually access their money and then do the transactions conveniently.
Right.
And also it should be giving a kind of attractive return, like Rahul was telling before, like attractive return, and also given the level of kind of a minimized risk. So that's very important for a newcomer.
Right.
And also if you're talking about in terms of investment amount, that should be like a reasonably small amount of money that they should be able to invest in. Because if you're talking about a newcomer, you can't be asking for a big investment that you're going and investing in a investment options, right?
Yeah.
So it has to be kind of a reasonably small amount where you should be able to invest in, and then you can get the experience and also the learning, so that will lead to long way in terms of your investment journey.
Yeah.
So if you are talking about these considerations or elements or factors, if you put it together, what's come to my mind is, personally I would say, is money market fund.
Right.
I think Rahul was also mentioning about it.
Yes.
So that's one of the investment option where you can find under the unit trust funds category. So
Right.
if you're talking about a money market fund, again, like I said, the consideration, it gives you a flexibility. You can take out the money anytime that you want.
Right.
And also you can access the transactions digitally as well. So there are online portals that you can access. And also it gives you a reasonable return or attractive return given the level of risk.
Right.
Like he said, there are different types available. The money market is one of the type which purely invest in the fixed income instruments. So that's comparatively, you say like it's a comparatively low risk than the other investment options that you can say.
Right.
So if you're talking about this in terms of the mutual funds, in terms of the unit trusts in Sri Lanka, I just wanted to just touch our neighbor country, right? If you're
Right.
talking about like Indian market. So here, how do we treat the unit trust? Where they in India, you find it mutual funds.
Right.
So if you're talking about the participation in terms of the investors' participation in the mutual fund and in India and also unit trust in the Sri Lanka, here in India, the participation out of the total population, 1.4 billion of population, it's 16%. If you're talking about Sri Lanka, it's less than 1%.
Right.
If I go precisely,
Yeah.
it's 0.54% of participation.
Right.
So where
Yeah.
are we now?
Yeah.
Like, so what is the main reason for this gap? So that's what I think we should be addressing as a responsible fund managers and
Right.
also the financial intermediaries in the industry.
Right.
So if you're talking that, we also believe that one of the key reason could be like a kind of a lack of financial literacy.
Right,
that we
right,
experience.
right,
Because
right.
I think
Yeah.
people doesn't have the information that they're supposed to have in
Yeah.
order to build their wealth.
Yeah, they don't have that access, right?
Correct,
Yeah,
exactly.
True. Yeah.
So like if I link to the like what Rahul said at the beginning,
Yeah.
I think if you can actually find an investment option which will give you more confidence in terms of savings, and also if you can build your wealth from an investment option that gives you more return,
Right.
I think technically retiring earlier is not going to be that much difficult. Right?
Right.
It's going to be like a very good thing that you can experience in your life.
Right.
Yeah.
Absolutely. And I think to that effect, I think that's what you guys are doing as well in terms of extending that, that hand, like, we can help you through this.
Of course.
From A to Z. Like,
Of course.
yeah, and that's been
Of
a
course.
very recurring theme throughout all the conversations I've been having.
Yes.
So, when it comes to financial literacy, about, gaining the right kind of knowledge about investing, how, where, the whens of it all, how can people kind of reach out to you?
Right. So that's what. So as a responsible intermediaries in the market in Sri Lanka, and also
Yeah.
as a responsible financial fund management company in Sri Lanka, I think we are also getting involved in like bridging the gap between the lack of financial literacy that we experience in the country.
Right.
So we conduct, as a company, various university visits to promote the financial literacy in Sri
Right,
Lanka,
right.
and also we conduct a lot of workshops and the
Webinars and
all stuff, and that we can give the information which is required for an investor to
okay.
make a smart or like correct investment decisions. So
Right.
that's what we are trying to do. Like even First Capital, we can access the First Capital online portal where you can make the investment and you can see the investments that you have made with the First Capital through online portal, where
Right.
you can access it in the website, First Capital website. And also we share, like we have a lot of WhatsApp groups where we share the market information about the things happening in terms of the capital market in Sri Lanka. So then
Right.
you can access those as well.
Right. Fantastic. And in terms of how they can kind of directly contact you if you want to give away that information.
Yes.
Yeah.
Of course. You can visit our website. So
Yeah.
there you can see Become an Investor. So there you can create your account and then just digitally onboard yourself, and then you start investing with the First Capital. And also you can call us during the working day between 8 to 5. You can contact through number 0112 651 651. So
Right.
that's the contact number where you can access all of a kind of investment related assistance and also the advice that can be provided through that number.
Right. And they can directly start investing through your portal, right?
Of course.
Yeah.
They can onboard themselves by themselves. So there's nothing in terms of the documentation. Just you get into the
Right.
online portal and you can digitally onboard yourself. So
Right.
that's like one step process.
All right, yeah, so there's no
Yes.
hassle then. That's fantastic.
Yeah.
For you tuned in, if you are a young person and you're like, hey, I got to make this money work for me, then all you have to do is contact First Capital Asset Management. They will walk you through it, and they'll make sure that Yeah, you made the right choice. Thank you so much to Mr. Kumaravaran and to Mr. Rahul. Thank you so much for coming on the show.
Thank you for having us.
Thank you for having us. Thank you so much.
My pleasure. It's our pleasure.